Hello traders, my name is Gregor Horat and welcome to a new video. This is this free video, special video for the forexspace.com, and in this video I will discuss about gold. The method that I'm using, my primary tool for analyzing and trading the markets, is Elliott wave theory. So actually I'm just counting waves, and in today's price action, what I see right now is that I'm tracking actually two completely different wave counts on gold. One suggests that we are still going lower, okay, within a 5-wave decline. This was our wave 1, wave 2, and extended wave 3. In Elliott wave theory, we know that wave 3 is typically the most stronger wave, which must contain 5 smaller waves. So this was a 5 move within wave 3, and now maybe we are in a wave 4 pullback higher, and we expect another low after a completion of this wave 4, another low in wave 5 of C. Okay, so that's one wave count, and another wave count is actually a little bit different, and it suggests that this 5-wave decline has already bottomed here, and that market is headed much higher, most likely in an impulsive fashion. Okay, but actually these larger wave counts are not important. The important is that we have two different wave counts on a larger picture. Okay, but for the near term, both wave counts are pointing higher. Well, firstly, let's take a look on that one. Well, when the wave 4 pullback occurs, like in our case, you will typically see a retracement in wave 4 back to the 38.2% retracement compared to wave 3, which is this distance. Okay, and at the same time you will tend to see a reversal or pullback back to the region of a previous fourth wave, and of a fourth wave of one lesser degree, and this was here. Okay, exactly this point, just around 1400 level, okay, which is very close to 38.2% retracement. So even if this is just a temporary corrective pullback, we still expect one move to the downside. Okay, so this wave count is bullish in the short term or mid-term, okay, and still bearish on the long term. Well, here we have a different wave count, which suggests, as I said earlier, that here market has already bottomed and we are now going higher in 5 waves. Okay, but check this trend line, which has been taken out I think 2 weeks back, and we know that when the trend line is broken, then usually this trend line, if the trend line was resistance, like in our case of this downward channel, then this trend line will ideally become a support when the pullback will occur. So we can see a nice breakout here, and we have seen a pullback which now appears already complete because we tested this trend line, and now the price is reversing higher. So I'm looking higher here, but the most important is that if we go and check the 4-hour chart, okay, you can see some very nice pattern. Well, on the 4-hour chart, this decline is very slow, it's very choppy, very overlapping, and the most important, it cannot be counted impulsively. Okay, in Elliott wave theory, the direction of a trend is identified by an impulsive wave structures, by an impulsive patterns. Okay, impulsive patterns are sharp moves in 5 waves. Okay, this is clearly not a 5-wave move, and it's not a sharp move. Okay, this was much sharper rise compared to current pullback. Okay, while corrective price actions are very slow, very choppy, because the market here it's in some kind of pause within the larger ongoing uptrend. Okay, so if we compare these two structures, well, I can easily say that this is definitely looking more corrective than impulsive. Okay, so I think that this is just a temporary pause with an ongoing larger uptrend. Okay, and in fact you can see here that recently price has broken through this upper trend line on this 4-hourly chart. Okay, so this trend line is pointing for higher prices in the near term, something similar like we have seen here on a daily chart, also a trend line breakout which is now pointing higher. Okay, So I think that gold is ready for move higher, probably next week, back to the previous highs from late July. Okay, now the next thing that I'm also using when I'm analyzing the markets are candlesticks. Okay, here we can see pullback on a daily chart, and notice this pattern which caught my eye. Okay, it's actually a morning star. We have here sharp long body down and a close at the low, then we have a doji and very strong body to the upside, probably the strongest within this pullback. And we can see that there was a close above the previous candle, bearish candle, that is part of this morning star. Okay, so this is actually also a reversal pattern, candlestick pattern, which is also pointing higher. Now the next thing, let's take a look also on this. What is this? I think, yes, it's a 50-day moving average. Well, here we can see that 50-day moving average always reacted as a resistance, so market was in a bearish mode. Well, recently these prices have moved through this 50 period moving average, which is now trying to react as a support in the zone. Okay, so if we combine candlestick patterns, 50 period moving average, personality of the price action, and the Elliott wave patterns, then this market of course is pointing higher. So that's the reason why I am bullish on gold and expect a test of the previous fourth wave here. Okay, okay traders, so that's it. If you like our analysis, then please visit our website. Just let me put this in so that you will know what's the website: www.ew-forecast.com. So visit our website. We have a free trial available for 7 days to new clients for no cost. So please check our website and hope to see you there. Have a good day weekend. Bye.